Now, if you're concerned that you might outlive your money, I've got bad news. Even if you're a high paid professional, a doctor, lawyer, whatever, it's an accurate and rational fear to have. You should be concerned. And as you'll discover in the next few minutes, it's because conventional financial wisdom is wrong. It's created by special interests, and guess what? It's rigged against you. The stock market is not the answer. Your IRA, your 401k aren't the answer either. Your wealth advisor, probably a really nice guy, but misguided and just as likely to die broke as the next high-paid professional. Now, what about gold, silver, and all these other precious metals? Sure, they might have a role to play in certain market conditions, but you know what? They're not the answer either. It gets worse. Our entire financial system is really an avalanche waiting to happen. And it's not a question of if, it's a question of when. The too big to fail banks of 2008, remember those? Well, now they're even bigger, and the derivative market, what Warren Buffett calls the weapons of mass financial destruction, have grown to over $1 quadrillion. I can't even imagine how big that is. And with this avalanche, all it's going to take is one little snowflake to unleash the fury of the whole thing. Maybe it's a big hedge fund making the wrong bet, another Lehman Brothers or something like that. And we're going to see the unraveling of Wall Street again. And this time, even worse than 2008. And when that happens, who do you think's going to pay the price? You, of course. Which is why, when the market's booming, you have to be careful about where you put your money. Sadly, you've been set up to be a victim in a system that's designed to separate you from your hard-earned money in the form of taxes, fees, regulations, all of these things that ultimately favor the ultra affluent. It's a system designed to intimidate you, to confuse you, to overwhelm you. And so what do? You end up handing all your power, all your money to someone else, someone who doesn't have your best interests at heart. But you're not powerless. Today in this instructional video, I'm going to show you how to turn the tables, to give you choices, education, information. And when we're done, I'll bet $1 to dime that at least once in the next few minutes, as I pull back the financial veil, at some point you're going to say, why didn't anyone ever tell me this before? My name is Buck Joffrey, and I'm a board-certified surgeon, not a Wall Street guy. In fact, I made my first chunk of money sucking fat from places where people didn't want it and putting it back where they wanted more. And after only 8 years of practicing, I called it quits because I could. If you'll invest some time with me and pay careful attention to the contents of this video, I believe it's going to be time really well spent. Why? Well, here's a handful of secrets you'll discover over the next few minutes. Secret 1. If you had a hunch something is not quite right with conventional financial wisdom, guess what? You're going to discover that everything most people believe in as gospel when it comes to money is in fact completely wrong and simply the creation of Wall Street. You're going to see how it's almost completely impossible to create financial wealth for yourself if you follow it. That's something the wealthiest families in the world have known forever. Secret 2. A better wealth strategy alone is only half the equation. You're going to need a wealth and tax strategy. Divorce and taxes are the two biggest expenses affluent individuals will likely face. If you're willing to take a little bit more of an active role in your tax problem, I'm convinced you'll be able to reduce your taxes by 20% or more. And some of you, under the right circumstances, might even be able to legally eliminate most, if not all, of your taxes. Why is this so important? Because it's not what you make, it's what you keep. Secret number 3. Now, this might be the most important secret of all. I'm going to peel back the curtain on something that the wealthiest families in the world, I'm talking about the Romneys and Rothschilds, that these families have known for generations. Something that's going to let you invest your money with virtually 100% guaranteed upside and no downside. It's an investment that can be grown tax-free that's been working since before the Civil War. It has produced a return through every crisis you can think of. The Great Depression, World War II, Jimmy Carter gas lines, dot-com bubble, and of course the 2008 real estate crash. Plus, I'm going to remove the fear from investing and show you how you can prosper and even pass on considerable wealth, legacy for your kids, instead of outliving your money like most of your peers will. Now, before we go further, I want you to know my motivation for creating this video for you today. So this is me, fresh out of surgical residency. I completed my training in 2008. And of course, that was when most senior physicians I knew lost over half of their investment portfolio because of the crash. I took a job with a big corporate company, and I was a great surgeon. But I didn't get along with corporate, and because life is not fair, I got canned for not doing things the way that the higher-ups wanted me to. And you know what? I was devastated. Really, this was like the first time I felt that I had really failed. And even though I was a guy who could literally drill through skulls without a change in heart rate, I cried like a baby for days as I found myself jobless. I really felt like a failure. But I've learned not to let a good crisis go to waste. So I got up, went back into business for myself, and you know what? I became a millionaire in short order, which created an even bigger problem for me. You see, I soon discovered that you can't earn your way to wealth. Now, I'm talking about true wealth. That's because no matter how much you make, earned income does not compound and get slaughtered and butchered by the tax man every time it shows its face. The only way to true financial freedom is through investing, plain and simple. But traditional routes of investing, handing money over to Wall Street financial advisors, sitting on the sidelines, twiddling thumbs, hoping for them to take responsibility for my financial freedom. Well, it didn't really appeal to me. After all, I just had a job that was taken away from me on a whim. I put faith in someone else, and it didn't work out for me. And you know what? I wasn't going to make the same mistake with my money. So what did I do? I got busy. For the next few years, day in and day out, I fought my way through the treacherous jungle of investing. I looked for knowledge high and low while trying to keep my wits about me to avoid those sharks. The sharks that make up the financial world, hungry to prey on the likes of the well-to-do professionals like me and my high-paid colleagues. This was actually harder, much harder for me than completing 11 years of training after college to become a surgeon. And here I am in front of you today with what I feel is my duty to share what I've learned. You see, I was obsessed with learning the financial secrets of the rich. What I learned has transformed my life, and now that obsession has turned into, well, a mission to help as many people as I can from dying broke. And you know what? I have a lot of time on my hands to think about what's important to me now. I don't have to work for a living. Of course, when people hear I'm a surgeon by trade, they assume I'm working all the time, like most professionals and business owners who earn a high income. But I gave that up. And over the last couple of years, I've spent a whole lot of time walking the neighborhood with my youngest daughter in her stroller, dropping my older kids off at school, and, well, to be honest, following the Minnesota Vikings. You learn to lose a lot when you're a Minnesota Vikings fan, but I couldn't help it anyway. I was born and raised in Minneapolis. And that's been a blessing to me. I really want to do something with my life to make it different. And maybe it's the Midwestern values in me, but you know what? I like to help when I can. And I realized that the problem I had when people asked me how I was doing what I was doing was, well, I didn't feel like the casual responses I was giving them were all that informative. And you can probably guess that didn't fly with me. So here we are today to once and for all break down to you all the lessons I've learned along the way to help those who want to help themselves to true financial wealth. And that is my mission. So let's get started. So most people, when deciding about where to invest their money for the long haul, think that their only option is to choose one mutual fund over another. However, and you might have already guessed it, mutual funds are one of the worst investments you can have. Essentially, what you're doing is betting that the fund manager will be able to pick stocks better than you. After all, they're professionals, aren't they? Well, sure. But that doesn't mean they know what they're doing, or even that they're right most of the time. According to the S&P Indices versus Active Funds scorecard, 96% of mutual funds fail to beat the market over a 15-year period. Well, with that type of track record, you'd think mutual funds would have been long out of fashion, but the opposite has happened. Did you know that there are more mutual funds in the U.S. than there are stocks? That's because mutual funds are a gold mine to those who manage them. The average size of a U.S. mutual fund is $1.58 billion. It gets worse. The reality is mutual funds are one of the worst investment vehicles from a tax perspective. And this is because all shareholders of those funds share tax liabilities, regardless of the length of ownership or when you purchase the fund. This means many investors actually bear a tax burden even if they didn't even benefit from the profits in the first place. And then we get to the fees. Now, you pay an average 4 to 5% of your investment for the fund to invest for you. This means that you have to see a 5% or greater return just to get back even. And we're not even taking inflation into account here or other hidden fees. And those hidden fees are hideous. Take the 12B-1 fee, for instance. This is a fee which essentially is getting you to pay for advertising of their fund to other investors. And don't get me started on the front-end loads and the back-end loads. If you knew how these work, I fear you'd become clinically depressed. And that's not my objective here. The larger point here is to know this. The duty for a fund to profit trumps its duty to serve you as an investor. Having a mutual fund is like going to your doctor for a routine checkup, but instead, the doctor puts you on the table and starts harvesting your organs. When you start tallying up those annual fees and the actual rate of return for an average mutual fund, it would take over 29 years to double your money, even with the rosy projections that the wealth advisors give you. It's just not enough. It won't be enough for you to survive, let alone thrive. There are a lot better ways to get your money to work for you. And for many, they think the answer simply is, well, let's invest in index funds. Well, index funds do have lower fees and essentially mimic what the market does, which means they outperform actively managed funds over 9 out of 10 times. Less fees, better return. Sounds good, right? Well, this might be a better solution, but it's not the solution you want. It's like being on a sinking ship and only plugging some of the holes in the bottom. Before the dot-com bubble burst, my own father poured a bunch of money into the market and nearly lost everything. And you and I both know many people who pulled a bunch of money out of the market from 2004 to 2007 and then put it in real estate hoping that the markets would continue to appreciate. Instead, a lot of them lost it all. Now think about all these unpredictable ups and downs. Feels sort of like being in a casino, doesn't it? It wouldn't be a very good idea to spend your retirement money at the blackjack table. There is, in fact, a better way. Now listen, wealth advisors like to point out the solid returns the market has produced over the last several decades. They like to show you how if you invested a few $1,000s every year since 1929, how you'd be a multimillionaire. You've seen that, right? And sure, if you stripped out all the fees and invested for nearly 100 years, that would be true. But curiously, if you look at the last 3 decades, the length of a typical working career, the average investor putting in $50,000 30 years ago turned it into about $147,000. That's just not enough. On top of that, we live in unparalleled financial times. We talked about the avalanche, and just because the S&P 500 did okay over the last 30 years doesn't tell us anything about what it's going to do over the next 30 years. Right now, as a nation, we have a $20 trillion national debt. Now, let me give you some perspective here. From the Civil War up to the year 2000, we only had about $5 trillion in debt. So what does that tell you about the trajectory of our economy? The Federal Reserve has kept interest rates at nearly zero for nearly a decade for fear of killing the sick patient that is our economy. Things have changed over the past few years. We are in uncharted territory. The Federal Reserve even admits this. Does it make sense for you to keep playing the Wall Street casino when your future is at stake? No, of course it doesn't. Whether it's mutual funds or index funds, it's still a gamble because you're still playing the capital gains game. What do I mean by the capital gains game? I mean that you only really get to see that money once you sell the asset itself. Right? When you buy a stock, most of the time you're just hoping that it goes up. You're hoping that when you sell it, it's going to be more than when you bought it. But what if it's not? And what about your life between now and retirement? Shouldn't your investments really start helping you live a better quality of life before your golden years? Is the only point in life to work your butt off for the next 30 to 40 years to have enough to play golf for a few years before you die? If not, then what's the alternative? Well, some people think that you have to take huge risks to get big rewards. Ever heard that one before? In fact, what I've discovered is that true wealth is generated by doing almost the exact opposite. You do it by minimizing the downside to a point where it doesn't even really matter anymore. I like the story of Richard Branson and how he started his airline. He bought 5 planes and negotiated a deal where Virgin Airlines would fail. He'd just give back the planes, and that's that. So no downside. He could not lose, but he could win, and he could win big. And of course, we know that he did. You need to realize that the wealthy use a different set of rules when they're investing. And you could even say it's a different rule book altogether. For example, even if they touch the stock market, most of them are going to use vehicles that allow them to amplify their upside and eliminate any risk of loss. If they invest in things like real estate, they use tools that allow them to amplify their returns, even invest their money in 2 different places at the same time. Most importantly, they invest for cash flow. Most of us invest for capital gains. What does that mean? Well, here's how I like to think of it. The wealthy focus on buying streams of income. Let me give you an example. Let's say you buy a business for $1 million. While it's true the business itself can appreciate in value and you could sell this business for more than you bought it for, the reality is that it's still playing for capital gains, right? You may be able to sell it for profit, you may not, but if the business can reliably and consistently put $10,000 in your pocket every month, you're now investing for cash flow. You just bought an income stream. You're not thinking about how much that business is worth. There's not even a reason to sell it. Same with real estate. You can buy a property for $250,000 and hope to sell it for more than that, or you can buy rental properties that consistently put thousands of dollars in your pocket per month. Again, you're buying an income stream, and if the value of the property goes down, who cares? Your tenants still need a place to live, and they pay you rent. Even if the value of the property goes down, you still have a stream of income. Of course, there are some challenges with this approach. First, you need to access a decent amount of capital. And of course, few people have $1 million sitting around waiting to acquire a business or something like that. You're going to need a bank to finance it. So now you're taking out debt and you have to pay interest on that loan. Plus, you have to go through due diligence of finding businesses or properties to buy for cash flow and make sure the right people are in the right place to manage these things, whether it's a business or property. So when I say this, if you're a full-time professional like a doctor or something, you might be thinking, there's no way I have time for all that. But what the rich know is that you can invest in these kinds of opportunities the same hands-off way that you can invest in the stock market through what are called private placements. Private placements are basically the investment of choice for the uber wealthy, and there's no reason why you can't participate as well if you qualify. You just have to know the right people. Because as you will discover, your network equals your net worth. And how do you get deal flow coming to you? How can you find such private placement opportunities that are far greater than anything that 99% of the people out there ever see? And how do you find turnkey financial products that, either mitigate or eliminate the downside so that you can take advantage of these investments with minimal risk? These are the secrets of the rich, and I've spent the last several years learning them, and I want to share them with you. Now, let me ask you a question that once I understood it changed everything about the way I invest. And reality is one of the keys to the substantial wealth I've been able to accumulate in short order. You ready for the question? How much of the upside would you be willing to sacrifice if it meant zero downside? Let me explain. If you put $50,000 into a cash flow investment vehicle that historically has been generating 25% returns year in and year out, but there was also a 10% chance that you could lose all your $50,000 investment, would you still invest? Well, I don't know about you, but I wouldn't take that bet. But what if someone else said, listen, I'll take on all the risk, but in exchange, after you make that first 13%, you give me the rest of the upside. And if the market tanks by 30, 40%, like it does every decade, you lose nothing. Now that sounds like a pretty good bet, doesn't it? In fact, if there's no risk of losing money, you could probably even get a bank to lend you some of the money to leverage up your account. And if you leverage up your account, that 13% cap that you had might suddenly start producing over 20% anyway. More importantly, you'd sleep well at night knowing that if the market tanks, you don't lose your money. To use a sports metaphor, you've switched from either a guaranteed home run or guaranteed strikeout to a guarantee of getting on base while potentially still hitting a home run. When it comes to my financial future, I'd rather take the guarantee that I'm not going to strike out, especially when you find out how many at-bats you get from this strategy. And you might be thinking to yourself, yeah, I'd take the deal if it really exists. Well, I'm here to tell you that I discovered that this type of investment is in reality something that the uber wealthy have been using for years, but most professionals don't even know that it's an option, even though it's open to them. Now, I just want to be clear about something. I'm not against speculation. It has its place, right? But it's only after you've secured your financial life and can invest without fear. Then, going back to the baseball analogy, it might make sense to take a few big swings for the rafters. Now, before I get into this any further, I have to address what has most likely popped into your mind at this point, which is, well, all these options sound great, but where do I get the money in the first place? Well, the answer is simple, but I have to tell you, it goes against conventional financial wisdom again. Therefore, it might initially be a sort of a jolt to your system, but stay with me here and just focus on the facts. Most people actually do have a source of money that they can invest in just about anything they want, but they don't. You know what it is? Ready for it? Your IRA or 401k. Did you know that more people in the U.S. have an IRA or 401k than own a home? That's because people place a lot of faith and value in these type of retirement accounts. But where do you think your money is typically invested in these accounts? You guessed it, mutual funds. Now let's talk about 401ks for a minute. 401ks have the worst fees imaginable. In fact, until 2012, 401ks weren't even required by law to disclose how much they were charging in fees. According to research by Investment Company Institute, the average 401k has 17 hidden fees on top of the average 3.17 management fees. And you know what? You can read all about these fees now as they're financially disclosed, but they are buried in about 50 pages of gobbledygook that's going to be utterly confusing, on purpose, by the way, and mind-numbingly boring so that you don't even bother. But just for perspective, if you make $90,000 a year, you'll lose over $250,000 in your 401k in fees by the time you retire. One of the biggest 401k providers just settled 2 class action lawsuits for $12 million due to high fees. The vast majority of money invested in IRAs and 401ks is invested into mutual funds. Now, this isn't going to help you. In fact, your money's going to do a better job helping the mutual fund manager with his retirement. So what's the alternative? Well, have you ever heard of a self-directed IRA or solo 401k? Most people have not, because it doesn't actually help the banks when you pull money out of Wall Street stocks, bonds, and mutual funds, right? It's not actually in your wealth advisor's best interest to help you invest in something that does not provide him with a commission. With a self-directed IRA, you can invest in rental properties, private placements, all the stuff that the rich invest in. And when you take control over your retirement funds like this, you can really accelerate the growth of your money. In fact, I know one guy who, this is true, he literally makes more money in cash flow through his IRA than he does his day job. It's crazy. But in reality, he's unusual because even though you can invest more efficiently with a self-directed retirement account, you can only put so much money in these types of vehicles. You know, the government caps contributions pretty quickly. And because of that, again, it may very well not be enough to last you until you die. Listen, I'm not being a pessimist. This is based on real studies that have been done. Did you know that according to the McKinsey Global Institute, the next generation will be the first that is actually poorer than their parents since World War II? The stakes are just too high for you not to take responsibility for your own financial well-being. So, if simply maxing out your IRA is not enough, what else can you do? Well, there are several options I've learned about over the last few years. And one of my favorites is a secret product that I've learned about from the wealthy, the ultra-wealthy that is, called Velocity Plus. Now, this is a strategy that is used by most people who have an ultra-high net worth, typically $20 million or greater. But I figured out a way how to make it available to anyone who's making at least $100,000. Now, maybe that's not you now, but it's where you plan on being soon. I can probably help you get there sooner. At any rate, let's talk about Velocity Plus. Remember the example earlier where you can take most of the upside in the stock market but eliminate the downside? Meaning that you won't see your portfolio destroyed by the next crash or bubble? Well, that's Velocity Plus. But it's not even the whole story, because with Velocity Plus, you get to grow your money tax-free. Let me repeat that again so you don't miss it. Tax free. It's not what you make, it's what you keep. So, tax-free growth, no downside. Beat the S&P 500 14 out of every 15 years. Doesn't that make you want to get up and sign now? Well, I'm signing up for one of these accounts right now, so I feel the same way. But wait, there's more. This investment vehicle is bulletproof to creditors. So if you're a high-paid professional, maybe you're a doctor like me, and you get sued, you don't have to worry that you're going to lose your nest egg. And the companies that provide these products are historically more stable than banks. Believe it or not, the companies that provide this kind of product have been around since before the Civil War and have thrived through the Great Depression, World War II, the dot-com bubble, the real estate crash, and every other catastrophe over the past 150 years or more. Banks failed, countries collapsed, but these companies thrived throughout it all. Now, if you're hearing about this concept for the first time, you might be thinking, why haven't I heard about this before? Why doesn't everyone know about this? No, it doesn't seem fair that the ultra-wealthy know about this stuff while 99.9% of the population does not, does it? How is that possible? Let me open up the black box for you, and you probably knew it existed, but the ultra-wealthy don't hope that their investments work out. They engineer them to work out. Hope is for the poor and middle class. Let me give you another example. Now, there's another product that pays you the tax equivalent of 8 or 9% annual compounding return. That's not bad, right? I mean, a lot of people take that in a heartbeat. But here's the kicker. You can also use this account to effectively invest the same money in two places at the same time. What? I know this sounds unbelievable. So let me give you an example because I haven't even gotten to the best part yet. Okay, check this out. So say you've got $100,000 in this account and it's growing at 5 to 6% compounding interest. The key word here is compounding. Now you can actually borrow that money from your account at a simple interest and invest it into something like an investment property or some other cash flowing asset. Of course, you could do that with a home equity line of credit too, right? Well, yeah, you could, but here's where things get really interesting. With the account that I'm talking about, when you borrow your money at a simple interest rate, it continues to grow at a compounding rate in the original account, even though you borrowed it. Isn't that crazy? That is called double dipping, investing the same money in two different places at the same time. Now, doesn't that sound like something that would help you grow your wealth quicker? Again, I can tell you from personal experience, it does. Again, this is just financial engineering. It's what the wealthy do. It's what banks do. So in this product, we're just acting like the bank. You determine and set the terms of your loans. So the only person who says you can or can't do a 5% loan for 20 years is, well, it's you. Once I learned about this double dipping strategy, I realized that all of my ultra wealthy friends were already doing this for their cash flow investments. This is an old strategy. It's been used by the wealthiest families in the world. You know, the Romneys, the Rothschilds, and there's no reason why you can't use it too. If you want to be wealthy, start doing as the wealthy do. The Rothschild family is the richest family in history. What do they own? Well, it's not mutual funds, right? The Rothschilds own banks, real estate, mines, farms, vineyards, energy companies, real cash-producing assets, and they leverage their cash as much as possible and engineer the successful outcomes of their investments. It's not luck. It's an unfair advantage. And that's where you start. I personally invest $500,000 per year in this kind of vehicle, a type of account that your wealth advisor will never tell you about, a product that you will never hear about on CNBC or any other financial pundit. But you will hear about these strategies from me. In fact, many people that I have showed this to have wisely diverted their money from their IRAs, 401ks, etc., into this kind of account instead. So how in the world did I learn about these strategies anyway? Well, this is another secret that I learned from studying the ultra wealthy. You see, the wealthy approach investing as a team. In fact, it's more than a team. It's like an inner circle or tribe. They have trusted advisors and operators. The wealthy build relationships with these people that make seemingly complex things like investing in real estate simple and really like turnkey. These kinds of relationships are incredibly valuable, not only for the investor, but also for the advisor. Everyone involved wants to protect the integrity of the relationship. They rely on it like a tribe relying on one another for survival. So once again, the wealthy know that your network determines your net worth. In my case, I can honestly say that my tribe, the people who'd pick up their phone in a heartbeat if I were to call, has not only allowed me to get investment opportunities that most of the population will never get their hands on, but they've prevented me on numerous occasions from getting ripped off. So where can you learn the ins and outs to all the financial strategies and the investors that you need to succeed like the wealthy? Well, when I started on this path, I was still practicing as a surgeon. The way I did it was trial and error, the school of hard knocks, losing a lot of money, hundreds of hours of study, and really relentless networking. Do you have to do the same? Well, fortunately you don't, because I've done the work for you. I just put together my first ever training program around all these financial secrets. I hired a professional film crew and one of the most talented course producers in the world. I assembled the very people who taught me just about everything I know about creating wealth in one place, my tribe, to teach you the same and make the tribe yours as well. This wasn't about money. This was a labor of love, something I wanted to pass on to my children someday. But before that, I want to pass it on to you, the hardworking professional who deserves to have the same information, the same opportunities as the ultra wealthy. I hope you're in a fortunate enough position to take advantage of this timely opportunity. The program is called Your Roadmap to Real Wealth. It begins with giving you full access to digital members area where you can download and watch every training video I've created around wealth. The course is taught by me and my tribe, many of the world's leading experts in these behind-the-veil financial strategies that I've talked and about many which I haven't. You can watch these videos online, download them, and even put them on a device so you can reference them whenever you want. In addition, if you prefer to listen, you're going to have audio files for all these training sessions. And I even hired a company to develop these really nice PDF summaries and action lists for each session. Here's a taste of what you're going to get when you sign up. So inside, you're going to find 5 modules of video and audio training with me and all my experts in real wealth creation. In order to help you consume the information better, the course is going to be released 1 module a week over the course of 6 weeks. I'm going to reveal the belief system that you have to have in order to become wealthy. They will defy conventional wisdom, but they will change the course of your financial life like they have mine. You're going to discover the 7 core principles of wealth creation, which will prevent you from ever outliving your savings, the same principles used by families with generational wealth. And not only are you going to learn the theoretical, but you're going to have the tools you need to begin your journey to financial independence by understanding the importance of and ultimately leveraging my tribe. You'll find all this valuable information in Module 1, and believe me when I say it's just an appetizer for the rest of the course. What you're going to learn from this course will transform the way you think about money. Even taxes. For example, you know the tax code serves 2 purposes, right? The first is to pay for things like roads, public education, safety, etc. But the second is to encourage you to invest in certain ways. They do so through incentives. And since for most people the biggest expense in their lives is taxes, it pays to know the insider secrets. And that's what you'll get. You'll have Tom Wheelwright, a former Big Four accountant who President Donald Trump called the best of the best. He's also the tax advisor to Robert Kiyosaki, author of Rich Dad, Poor Dad. He's going to hand all these secrets to you on a silver platter in Module 2. In Module 2, you're also going to get one of the leading estate planning and international asset protection attorneys in the United States, Kevin Day. Kevin is my attorney, and he's also an expert on issues affecting business owners and has worked with a lot of very high net worth individuals. He's going to talk about how you can protect your money from creditors using domestic and offshore strategies. And he's also going to talk to you about how you can leave a legacy without getting beaten down by estate taxes. In Module 3, you'll get the masters at creating real estate syndication and international investing and development, Russell Gray and Robert Helms. They're going to give you their incomparable knowledge on how to truly leverage real estate to your benefit. Next in Module 3, you'll get Ken McElroy. Now, Kenny is a genius. He's a really famous real estate syndicator, and he is an advisor to Robert Kiyosaki. He's going to offer you a unique perspective on how you'll get the biggest returns on your investment. And you know what? He knows because he has over $700 million under management. You'll also get training by Marco Santarelli. He'll show you how to find exclusive investment opportunities in growth markets around the United States because real estate is all about supply and demand. Then there's other modules where you're going to get training from me, plus people like George Newberry, who after being $26 million in debt after a natural disaster, didn't file for bankruptcy, but actually developed a strategy to gain leverage over creditors, settle huge debts at huge discounts, and sometimes erase debt completely. The interesting thing about George is that he doesn't invest just his own money. He gets a lot of financing through investors who really get a great deal in return. In fact, you could invest in his fund right now with as few as a few $100, and he'll give you 12% annual return on investment issued as a monthly check. Pretty sweet, right? Mauricio Raul, now he is a master at alternative assets, especially syndications and private placements, and any kind of investment you can purchase that is not a stock. He's also one of the leading compliance and asset protection lawyers in Southern California. And of course, Dean Graziosi, an entrepreneur who has sold over $2 billion worth of education products, and he's going to explain the real meaning behind wealth and legacy. In addition to training sessions by these brilliant individuals, you're going to get separate roundtable Q&A sessions with almost all of them. And as I mentioned, you're going to get audio, PDF summaries, and worksheets for each session for reinforcement. Of course, that's not all. You see, the problem I've seen most people face when they get access to training like this is that they consume the information and maybe even think to themselves, you know what, this is great stuff, this is brilliant, but then stumble because they can't just start applying their knowledge to the real world right away. Which is why in a separate bonus training, which you're going to get complete access to free of charge, I'm going to go through a variety of typical scenarios and show example investment plans for each and every one, so that you can see how the knowledge you possess after going through this training can be applied to the real world right away. Then, as a time-limited bonus, you'll get free access to our online community forum, the Wealth Formula Network. This tribe is the same one that has helped me to become financially independent. This is really important because this exclusive private community will really let you put your tribal investing into high gear by giving you immediate access to like-minded individuals to work together and to achieve more. It's a team sport, which is why it's an absolute must for you to act quickly and secure your access to Wealth Formula Network. I truly believe that the information inside your roadmap to real wealth is worth millions. And the amount of fees you'll save on your current investments as a result of the knowledge gained from this training will add up to hundreds of thousands of dollars, if not millions over time. You know, one of the biggest advantages of the ultra wealthy is actually available to everyone. It's financial education. Every year, I spend literally 6 figures investing in my own education, going to workshops, seminars, masterminds. I spend tens of thousands of dollars for these one-type events, and I can tell you that they're worth every penny. I see them as return on investment. They're investments, not expenses. For now, to help offset the cost of the film production, hiring a digital support team, tech people and staff, I'm making these trainings available for just $19.97 if you want to take care of it all at once, or 4 installments of $549 each if you prefer. And just like Wealth Formula Banking, this investment is also 100% risk-free. You only invest if you're absolutely, certainly, undeniably happy with every bit of knowledge you're getting. In other words, during the next 14 days after your investment, if at any point you feel you're not getting at least 10x or 100x on your money, you're more than welcome to shoot me a quick note that you want your investment back, and I'll happily oblige. Now, my marketing friends have urged me to price this much higher because they're saying I'm selling dollars at a discount, essentially, asking for a tiny investment to show you how to get major returns on your investments. But you see, unlike some of the financial podcast guys out there and bloggers who make their money on selling financial education rather than investments, I make my money the same way I'm going to show you how to. I'm already financially independent because of these investment strategies. This project was a labor of love for me to help you get where I am. But to get there, You have to invest in your financial education. And I'm confident you'll find your investment with me to be one of the best you've ever made. It's going to allow you to actively take responsibility for your financial future. Now, I don't know how long I'm going to keep it at this price by offering it to you so low. Sometimes it's hard to believe that there's so much value there for you. So we'll see how it goes. I can guarantee you this, though. It's never going to be lower, and the price will go up in the future. In fact, if you see anything below this video on this page with a warning about an impending price increase, then you'll know I've made that decision to bump the price up. So act now. The sooner you act, the sooner you can benefit. And the longer you wait, the more you end up overpaying for underperformance on your current investments. You're getting eaten alive and taxed out the wazoo to invest in something that's likely going to have the bottom fall out of it 35 to 50 more times in your lifetime. No more. So it's time to get off the sidelines and take an active role in your financial future for yourself and for your family. Sign up now, and I'll see you in Module 1, which is immediately available to you as soon as you click on the sign up button below and complete the enrollment form.